Assalamualaikum warahmatullahi wabarakatuh. I'm Raini Devi, an accounting student class F. Now, I'm going to explain you about traditional cost systems from Accounting Principle 2 by Elizabeth A. Minbiole. And then so, keep watching! Traditional cost systems. The two basic types of manufacturing processes are the job order approach, where each order is customized, and mass production, where the product is always the same. To company, these procedures are the two traditional types of cost accounting systems: job order cost systems and process cost system. The information captured by these cost accounting systems aid managers in determining total production cost. Job order cost system. The job order cost system is used when products are made based on specific customer's order. Each product produced is considered a job. Costs are tracked by job. Services rendered can also be considered a job. For example, service companies consider the creation of a financial plan by a certified financial planner, or of an estate plan by an attorney. Unique jobs. The job order cost system must capture and track by job the cost of producing each job, which includes materials, labor, and overhead in a manufacturing environment. To track data, the following documents are used. First, job cost sheet. This is used to track the job number, customers' information, job information, individual cost information for material used, labor, and overhead. The second is materials requisitions form. To ensure that materials costs are properly allocated to job in process, a material requisitions form is usually completed as materials are taken from a raw materials inventory and added to work in process. And then, time ticket. Labor costs are allocated to work in process inventory based on the completion of time tickets. And then, predetermined overhead rate. Factory overhead costs are allocated to job in process using a predetermined overhead rate. The predetermined overhead rate is determined by estimating total factory overhead costs and dividing this total cost by direct labor hours or direct labor dollars. For example, assume a company using direct labor dollars for the allocation of overhead. Estimated its total overhead cost to be $300,000 and total direct labor dollar to be $250,000. The company's predetermined overhead rate for allocating overhead to job in process is 120% of direct labor dollars and is calculated as follows. Predetermined overhead rate equal total factory overhead cost divided by total direct labor cost. Once a job is completed, the total costs assigned to the job are transferred from work in process inventory to finished goods in inventory. Once the job is sold and delivered, the job costs are transferred from finished goods inventory to cost of goods sold. The ending balance in these three inventory accounts would be reported as inventories on the balance sheet, and cost of goods sold would be reported on the income statement. And then, process cost system. Some companies have homogeneous or very similar products that are not made to order and are produced in large volumes. They continually process their product, moving it from one function to the next until it's completed. In these companies, the manufacturing costs incurred are allocated to the proper functions or departments within the factory process rather than to specific product. Examples of products that companies produce continuously are cereal, bread, candy, steel, automotive parts, chips, and computers. Companies that refine oil or bottled drink, and companies that provide service such as mail sorting and catalog order are also examples of continuous, homogeneous processing. The raw material are assigned based on material requisitions form, the labor based on time tickets, and the overhead based on the predetermined overhead rate based on direct labor dollar. The journal entries to record these transactions are made prior to the period and entries that transfer the amounts from one work in process inventory account to another, from work in process inventory to finished goods inventory, and from finished goods inventory to cost of goods sold. Raw material requisitioned. Best chips started the month of June with $5,200 in raw materials inventory. Best chips use the perpetual inventory method, so raw materials purchases are made to the raw materials inventory account when they are received. Raw material requisitioned that become part of the final product or are used by a specific function are considered the direct materials used. The cost of direct materials are added to the proper department's work in process inventory account. Raw materials requisitioned that are used for general production purpose are added to factory overhead. And then factory labor. As the factory labor payroll is prepared and recorded, the payroll costs are split between those employees who work in specific function and those involved in the general function of the factory. The specific function costs are called direct labor and are assigned to work in process inventory. The general factory labor costs are indirect labor costs that are added to factory overhead. Unlike the accounting for payroll under the job order cost systems, the employees does not have to be physically involved in making a product to be assigned to a specific function. If a specific maintenance worker or supervisor is assigned to the preparation function, their wages are allocated to that function even though these workers are not directly involved in preparing the chips to be baked. And then factory overhead. In a process company, factory overhead represents those costs not directly assigned to one function. For example, the depreciation expense of a machine used solely by the preparation function would be assigned to work in process inventory for the preparation department, while depreciation expense for the plant would be assigned to factory overhead as all functions occupy the plant. And then work in process accounting. At the end of the period, entries are needed to record the cost of the product moved from one function to another. In this example, costs are moved from work in process inventory preparation to work in process inventory baking, and from work in process inventory baking to work in process inventory packaging. When the packaging function completed its work, the product is already be sold. The cost of the complete products are then transferred from work in process inventory packaging to finished goods inventory. This transfer also requires a journal entry. I think that's all about my explanation. I hope this lesson can be useful for you. So, thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.